Welcome to episode 40 of Sean's Take on Asia, where we touch on the latest news on digital asset development and policy updates. I just came back from spending a few days in Taiwan and had the opportunity to meet with the Director General of the Financial Supervisory Commission to explore their future policy development plans. Many of their considerations I've already covered in episode 38 from a few weeks ago, but one thing that stood out from this meeting was the focus on establishing RWA-related policies. Specifically, the topic of security token offering, or STO, and tokenized securities came up. It seems these two terms are often mixed up with each other, even though there are significant differences between them. So let's talk about that in this episode. An STO is a type of public offering in which tokenized digital securities, known as security tokens, are sold in security token exchanges. That means they are created natively on-chain first, rather than being a tokenized version of an existing security that's already available in traditional markets. Also, STOs are regulated by securities laws and require compliance with regulations like the Howey test, while tokenized securities may not always be subject to the same level of oversight regarding the token itself. Maybe an example can further demonstrate this in detail. While I was at Algorand, we partnered with World Chess and Securitize to leverage blockchain technology for fundraising and increased engagement. Specifically, World Chess planned to conduct a hybrid initial public offering that included both a traditional IPO and an STO. The STO accounted for 5% of their ownership, represented by securities tokens, and were natively created on the Algorand blockchain. The rest were offered as traditional securities, effectively allowing World Chess to tap into both the traditional finance and crypto markets. The STO was also structured to ensure compliance with securities regulation, providing investors with legal protections typically associated with traditional securities. So, natively on-chain first, rather than a tokenized version of an existing security. Now, compare that to tokenized securities, in which there are many examples already worldwide. There are tokenized bonds, shares, treasury bills, and investment funds. Some of these are offered by financial institutions, but also some offered by third-party tokenization service providers. Let's look at some examples as well. Last year, UBS issued a tokenized structured note from the Bank of China International in Hong Kong, leveraging UBS's in-house tokenization service. This tokenized warrant was based on an existing stock, indicating that this was a tokenization of a traditional financial product. It was also issued within the existing regulatory framework for traditional securities in Hong Kong, rather than under a specific STO regulation. The real innovation here, though, is that this was issued on the public Ethereum blockchain, rather than a private proprietary network, and it allowed for non-custodial ownership of the token. But again, this was a tokenized version of an existing security, not one that was created actually natively on-chain first. Another example of tokenized securities is from Ondo Finance, where they have gained significant leadership position in the market for tokenizing US Treasuries, including ones from the likes of BlackRock's iShares Short Treasury Bond ETF and other money market funds. Unlike a single STO event, Ondo continually offers various tokenized securities products as the demand from these tokens grow. In other words, Ondo continues to buy these traditional financial products, tokenize them, and then issue them in tokenized representation of these products. Given these examples, you can probably see why there are significantly more examples of tokenized securities worldwide in comparison to STOs. This will likely be the trend in the short to medium term. With that said, the true transformation will come in the form of digital securities being created natively on-chain, leveraging blockchain innovations to enhance transparency, reducing transaction fees, and streamlining settlement processes. This will take some time, as STO regulations are still taking shape across major jurisdictions, but I strongly believe this will be the norm once the market matures. That's all for the week ending August 2nd. If you like this content, please follow me on LinkedIn and subscribe to the YouTube channel. Until next time, keep innovating and keep demonstrating the transformational promise of Web3.